Did you know? India is one of the largest consumers of gold in the world and imports as much as 800 to 1000 tons of gold each year. It is estimated that roughly around 30% of the import of gold in the country, every year, is to meet the demand for gold for purely investment purpose. Sovereign gold bonds are a kind of government bonds that are issued by the RBI on behalf of the government on payment of rupees but denominated in grams of gold. The value of these bonds is tied to the value of gold. On redemption, the investor gets interest income and the prevailing price of gold. The gold bond schemes that have been launched by the Government of India, so far, have been based on the idea of accepting a deposit of gold from the customers and providing them with certificates or bonds for a fixed maturity and interest payment. These bonds are different from usual government securities as the redemption value at the time of maturity is not a fixed sum, but linked to the price of an underlying commodity called gold. For example, if an investor invests in a 10-gram SGB, at the price of say 4,000 rupees per gram, then he is entitled to a yearly interest income at a certain percentage, plus on maturity, he will get the prevailing price of gold which may not necessarily be 4,000 rupees per gram. The Reserve Bank of India has decided to offer a discount of 50 rupees per gram on the nominal value of the sovereign gold bond if applied through online like G-Seconds. SGBs are also backed by a sovereign guarantee. Did you know? The bond will be tradable on exchanges, if held in demat form. It can also be transferred to any other eligible investor. Gold monetization scheme focuses on those individuals who have gold available with them and intend to encash it for realizing its monetary value. On the other hand, the sovereign gold bond scheme targets those individuals who intend to purchase gold for investment purpose. The investor investing in SGB instead of gold are benefited with interest earnings on an otherwise dead asset. Ease of storage and handling gold, while preserving its advantage of earnings in terms of appreciation of its prices in future. An alternate instrument for investment. And if you are thinking what are the benefits to country's economy? It will reduce the cost of the government's borrowings. Thus, an interest payment below this level is a yearly saving for the government on account of its borrowing cost. A decrease in the price of the gold will be a gain for the government. It will reduce the demand for physical gold to some extent and thus helps in reducing the annual demand for import of gold. Here are some features of SGB. The bonds are denominated in units of 1 gram of gold and multiples thereof. The minimum investment in the bonds is 2 grams with a maximum subscription of 500 grams per person per fiscal year. Price of the bonds is fixed in Indian rupees based on the previous weeks. The simple average closing price for gold of 999 purity, published by the India Bullion and Jewellers Association Limited. The bonds will bear interest at the rate of 2.5%, fixed rate, per annum on the amount of initial investment. Interest will be paid in half-yearly rests and the last interest will be payable on maturity along with the principal. Please note that interest on the bonds will be taxable as per the provisions of the Income Tax Act, 1961. The bonds will be repayable on the expiration of 8 years from the date of issue. Premature redemption of the bond is allowed from the 5th year of the date of issue on the interest payment dates. The redemption price will be fixed in Indian rupees based on the previous week's simple average closing price for gold of 999 purity, published by IBJA. The bonds can be used as collateral for loans. The loan-to-value ratio will be as applicable to ordinary gold loan mandated by the RBI from time to time. The lien on the bonds shall be marked in the depository by the authorized banks. The investment in the bonds will be eligible for statutory liquidity ratio (SLR) compliance by banks. Sovereign gold bonds has been made available for subscription at the branches of scheduled commercial banks, designated post offices, or you can also subscribe through agents. The KYC norms on SGBs will be the same as that for gold. Further, this is available for sale only to resident Indian entities including individuals, Hindu undivided families, trusts, universities, charitable institutions, minor through guardian etc. In future, gold bonds may be made tradable, and to facilitate the same, the investor will have the option to keep the gold bond in the made form. For more information, visit our website, umric.in, or call us on the number given below.